All right, guys. Welcome to Next Level Trading. We're going to get this show on the road. Today, we're going to talk about Fibonacci extension today. Okay, so let me get that slide pulled up. That way we can get started. We got still some more stuff to go over today. But after today, you guys should be pretty much good to go, especially if you guys been watching the videos as well. All right, so trading Fibonacci extension in the market. Fibonacci extension is mainly used to take profits in trades. Its sole purpose is to let a trader know when to exit a trade and take profit. Important levels you want to remember when trading. The fib levels are, you got the point 618 level. You have the point, 1 second, I'm supposed to, let me turn this down real quick. Turn the music down a little bit. All right, guys, let me know if the music is a little bit too loud. I'll be more than willing to, turn it down a little bit more. But let's get back to where we were at. 1 second. All right, so important levels you want to look for. When you're using the Fibonacci retracement, on levels such as the 0.5 level, 0.618 level, which is golden as well, the 0.786 level, and then the 0.382 level. So those levels you want to make sure you look out for. They're the same levels that you've seen when we were looking at the Fibonacci retracement. Now, also, just like the Fibonacci retracement, the fib extension is mainly used in trendy markets, and it's really not good with consolidation. So, keep that in mind, that, you want to make sure that the market is volatile and that it's moving, and it's not just in a, spiky, consolidated, motion. So, trading Fibonacci extension in the market, how to use the fib extension tool to draw fib levels, okay? And so these steps starting off is pretty much similar to how you would use the fib retracement as well. It's used really after you identify your swing high or swing low and have your retracement level set. So you want to use the Fibonacci extension after you use the Fibonacci retracement tool, okay? Now always keep in mind your important levels. As I just mentioned before, 0.382, your 0.5 level, 0.618 level, 0.786 level. You want to use in conjunction with strong historical price levels, and I'll get to that later. But if you see these important levels, and then you do a little back test and see that price is struggling at either one of these levels, well, you want to keep that in mind and have a little zone in preparation for a reversal or a take profit. Okay, so assuming we are in an uptrend, you will want to start the fib retracement tool from the bottom left part of that swing high, because remember, whenever we're in the uptrend and we find a swing, that is considered a swing high. So you want to start the tool, the retracement tool, from the bottom left part of that swing high you discovered, and then drag it all the way up to the top right part of the swing, and then click and bring it back to the bottom of the retracement, assuming we are in a bullish trend and looking at a swing. This will bring out your fib retracement levels, guys. And I'll show you guys an example on the next slide. If price was in a downtrend, let's say we're looking at a swing low, it would be the same thing, but just the opposite, okay? So instead, you would start your fib retracement tool at the top left of the swing and bring it to the bottom right. Then click and bring it back to the top right of the retracement. Then click again and release the fib retracement level. So, we'll talk about that. I know there's a lot of words, but we'll go into detail. All right, so here's an image right here, okay? Okay, so what you have here is you have it's a downtrend, right? It's going downwards, and you know you've identified your swing low right here, and then price retraced up. And this is what you're seeing right now. What you're seeing is actually the fib extension tool. But before the fib extension tool, I used the fib retracement tool to validate that this was a rise right here was a valid retracement. Okay, so I did that, and then after you do that, you want to then bring out your fib extension tool to see, you know, let's say if you were to take a sell here, you want to see where to get out. Where would your trouble area be, right? And so when you bring out your fib extension tool, or Fibonacci, yeah, extension tool, you want to first look for the swing, right? So here's our swing. So we'll start the swing at the very top. So you'll start the swing by clicking at the very top, then bringing it to the bottom, and then bringing it at the very top of the retracement. If only if it's a downward swing, okay? If it's a swing low, you want to bring it at the very top of the retracement. Now, if we were talking about a swing high, we would stop at the very top. I'm sorry, at the very bottom of the retracement. So here's at the very top of the retracement, and then if we were dealing with the swing high, we'll be looking at the very bottom of the retracement. Okay, so keep that in mind. So yeah, so like I brought out the fib extension tool, and as you guys can see here, you know, you have your 0.5 level, your 0.618 level, your 0.786 level. You also have the 0.382 level, right? Okay, now look in the past. Look to your left, and you kind of see where in the past, you know, levels have, you know, kind of rested on some of these, or actually prices rested on some of these levels. So here's the 0.786 level area right here, and you can see some support has been left out there. And then also here's the 0.618 level, and the 0.5 level where price has found some support there as well in the past. So, you know, you kind of want to mark up your zones that way, and then expect price to kind of struggle. And you can see that's actually what kind of happened here, right? So price went down, came up with the retracement. You brought out your fib extension tool, and you also marked your zones where you thought price would struggle. So these red rectangles are where you thought price would struggle, right? And so you marked them up, and look, price came down, and look, it even struggled to break this because it consolidated a little bit, and it was support again for a little bit, but then it fell through. You know, so this could probably be your TP1, your take profit 1, and then this could be your take profit 2. But look, price fell through and then made this support and even created price action. Here's like a what? A morning star, you know, or yeah, morning star. So it even made it a price action formation here and then went all the way up. So that's beautiful, guys. I mean, you know, you'll be taking profit, and then if you've seen this, you can take another order and do a buy because you see that price is going up. Simple, right? So yeah, that's how you want to look at the fib extension tool, guys. Just keep that in mind, and you know, we'll go from there. All right, cool. So we're gonna go over to trading harmonic patterns in the market. Now we're only gonna choose one harmonic pattern because, you know, it's my favorite, and that's the one I'm best at. I'm not gonna try to be no guru or god here and, you know, lie to you guys, but I really like the Garlic pattern. It's really been doing me well, especially with price action. I like to use the, you know, harmonic pattern with price action. So we're gonna talk about harmonic patterns in the market, right? And so a harmonic pattern is pretty much a combination of everything I just talked about. So you'll be using you can use your fib retracement tool, your fib extension tool, etc., etc. Now let me kind of show you. Let me take a step back and show you guys how to actually draw out the fib. Let me show you guys how you actually want to draw out the fib extension tool. Okay, so let's say we have our swing high, price comes down, right? We bring out the Fibonacci retracement tool, okay, just to make sure that that it retraces at the proper level and is also confirming that we have a valid retracement, right? Right. So, you know, we bring out the tool and kind of measure, okay, where did price fall at, where did it retrace at, and then bam, you'll see the 0.618 level is actually where, you know what I'm saying, it kind of hit bottom, right? And then it went up. And it went, let's say, what level would I like to use? Actually, let's just leave it like that. Okay, so now you use your fib retracement tool to see if this is a valid retrace, right? And it is. Cool. So now we bring out the fib extension tool, right? And so how you want to use the fib extension tool is, here we have a swing, high. So as I mentioned in the PowerPoint, you want to use the very bottom left of that swing high, bring it all the way to the top right of the swing high, and then since we're dealing with the swing high, you want to end it at the very bottom of the retracement. Now if it was a swing low, we'd be ending it at the very top of the retracement, right? Right. And so down. So bam, there's your fib retracement levels, or fib extension levels. And let's say we have price struggling in, you know, certain zones. Let's see. So price struggle here. Let's say price struggle here as well. You know, you can actually make a little red triangle, guys. And don't worry, guys. I'll show you how to use these tools on this platform. That way, you guys have a better understanding of, you know, how to trade the markets using these tools. But yeah. So like, let's say we had trouble. You know, prices like in the past, price had some problems. So let me kind of emulate that a little bit. Let's see. Let's see if I can kind of. All right, cool. So yeah, as you can see in the past, price consolidated around this area, and then also you know, had support and resistance between here. So this is the zone you want to look for your retracement. And then, so let's say price does retrace up, starts going up. This is where you want to do your take profit and get out of that trade, and then take the money that you were able to acquire. So that's kind of simple. Just drawing it out and also showing you guys how you want to use the fib extension tool. Pretty simple. Before I continue, does anybody have any questions so far? Awesome, awesome. Cool. Yeah, so if you guys have any questions, just, you know, feel free to let me know. But until then, we're just gonna keep rolling. All right. All right, so we're gonna talk about trading harmonic patterns in the market. Okay. Now you may ask yourself, what is a harmonic pattern? Well, a harmonic pattern is a pattern in the market based on mathematical equations that gives you an idea where the market is going. So you guys remember when I talked to you guys about how you guys remember when I talked to you guys about how harmonic patterns are also composed of Fibonacci retracements. They're composed of Fibonacci extensions. They're composed of trend lines. And so if you look at the definition of what a Fibonacci extension is, I mean, you'll see the same thing, you know, pretty much the same definition that I have in the PowerPoint, okay, for Fibonacci retracement. So, you know, you typically, as I mentioned before, you typically use fib retracement levels to create the patterns. You can also use fib extensions as well to predict where the pattern's gonna give you your take profit, or tell you when to exit the trade. Now there are many different harmonic patterns. You have a bat pattern, garlic pattern, you have the butterfly pattern, you have the ABC pattern, the traditional ABCD pattern. You have AB equals CD pattern. Yeah, so there's a lot of different patterns you can use out there in the market. But me, I kind of like to keep it simple in regards of just simply using not too many of them. But to be honest with you, I'm really, if all of them are doing really good for me, then I really wouldn't mind, to be honest with you. But I'm still doing some research on most of these patterns as well myself. But for the most part, ABCD and the Gartley pattern is what we're going to cover in this section, in this webinar. So just keep that in mind, and when doing this video or this recording, just expect to see those. So yeah, what you see right now are pretty much all the different patterns that you can find. And I'm gonna give you guys some time to just kind of look over these patterns. I don't know if you guys can really see them, but yeah, just look at each pattern, see how they form, look at the numbers, and see how they correspond to the fib retracement list. I'll give you guys just a couple of seconds just to do that. Yeah, I feel you, Grant, on that. It's definitely a lot of things that you want to look at, but when it comes to something that you just learned, just take it a bit by take a bit by bit approach, and just go learn as you go. So it's really only confusing because you really I really hadn't talked about it, but once I dive into it, trust me, it'll make a lot more sense. And if it doesn't by then, just go ahead and send me a message, and I'll be more than willing to help you out and answer any questions that you may have. Okay, so what we're gonna do is just keep going. All right, so how to identify a harmonic pattern in the market. So we're going to talk about the ABCD pattern. Okay, so you first want to identify the first swing. All right, and you usually do that, as I talked before, by using the fib retracement level. That's how you are able to identify your first valid swing with your retracement. Okay, now you use the fib on the swing leg and look for retracement all the way up between the 0.618 and the 0.786 level. You also want to keep in mind that price can close or even wick touch anywhere between the 0.618 or the 0.786 level, and it can even wick touch above the 0.786 level, but it cannot, like a candle cannot close above that 0.786 level or below, just depending on whether or not we're looking at a bullish or bearish ABCD pattern. Okay, now there's two types of ABCD patterns, right? As I mentioned, you have the ABCD pattern, AB equals CD pattern. I'll just talk about the ABCD pattern for now, and then touch up on the other one. But now there's also two consequences you can get from using the ABCD pattern. You can get a bullish pair, or after the completion of the ABCD pattern, you can get a bullish pair, or at the completion of the ABCD pair, you can get a bearish pair as well. So just keep that in mind. That's why when I talk about whether or not price closes above the 0.786 level, I'm really talking about a bullish ABCD pattern. Don't worry, guys. Don't get too caught up in the words and the numbers. We'll get this situated and cleared up. Now, what we want to look for is for price to go past the first swing. Okay, so the first swing is considered your A to B leg. Now it could be considered your X to A leg, but we want to make sure that price passes that B point. Once price passes the B point, then we have an ABCD pattern. Because we can still be looking at a Gartley pattern, which is, it starts the same way as the ABCD pattern, but it's just a little bit different. So that difference between the ABCD pattern and the Gartley pattern is why we kind of have to wait for a couple of rules to play out. So if price doesn't pass up the B point, then we cannot yet confirm whether or not our first price swing is an X to A, which will mean we have a Gartley, or an A to B, which will mean we have an ABCD pattern. Now, just to continue on how to identify ABCD pattern, you also want to note that the ABCD pattern and Gartley, as I mentioned before, they both start out the same way, and the only difference between them is if whether or not the D point closes below or above the B point. Okay, so if the D point closes below or above the B point, then we have a true ABC pattern. If up until this point the D point closes short of the B point, then we have a Gartley pattern. And as a result, we have to change the letterings of the points and make the first point start with an X. And so, you may ask yourself, what is a bearish or bullish ABC pattern? Well, I just answered that earlier. Bullish ABC pattern is when the completion of ABC pattern gives you a bullish market, while a bearish ABC pattern is when the completion of an ABC pattern gives you a bearish market. Okay. You also want to note that if price doesn't retrace up between the 0.618 or the 0.786 level, we are now looking for a potential AB equals CD trade, which is the non-traditional harmonic pattern. So, it's pretty much the same as the ABCD, but now that we have a retracement short of the 0.618 level, around the 0.5 level, then we now consider a non-traditional ABC equals CD pattern, because a lot of people it's more conventional to have that 0.618 level hit. And so, as I mentioned, the only difference between the ABCD pattern and the AB equals CD trade is that on the AB equals CD trade, we do not get a retracement up to the 0.618 or the 0.786 level. It stops prematurely. So we'll talk about that later. All right, so the moment we get price to close below or above, depending on whether or not we are looking at a bearish or bullish ABCD pattern, the point is when we can say that we have a true ABCD pattern. Okay, after the C point is formed, you can then look to go in for an aggressive sell or buy, placing your stop loss at the very top or bottom of the fib levels. Your reversal zone will be between the 0.618 and 7.86 levels on the chart, which is also seen as your D point. If you are looking for a second place to take profit, you could simply just look into getting the length of A to B and then adding it to the C point to give you an approximation of where you think price is going to give you your D point, also known as your take profit in this case, right? If you're selling from the C point. But do note that having your take profit all the way down to the D point could be pretty risky for the aggressive C point sell, because that price will go up prematurely because it could be a Gartley pattern, all right? So safe place to put your take profit where a Gartley pivot would be at. Now the trick here is just to find that spot, and you can do this by following the following steps. So to find the potential B pattern or B point, you then have to get the fib retracement tool and extend it from the B point to the A point. Look for the zone after the 0.618 level, but before the 0.786 level, and that would be the zone where you would like to have a take profit. So guys, this is really just for if you're looking at the PowerPoint and watching the video. This is gonna all make sense once I go over it. So don't get bombarded with these words, okay? I got you guys. All right, so so you guys see, after the D point is formed, you can then enter in for a buy or sell. It's least preferable over the C point entry, so this entry is actually less preferable over the C point entry, but it's still a trade that you can make. Oftentimes, you may see price reversing short of your expected D pattern, assuming that the ABC D pattern is bullish. So here's an example, guys. So we first bring out our retracement tool, right? And we want to make sure that the retracement is proper, that our swing is actually valid. And we can do that by making sure that the retracement is up, around the 0.5 level and higher, right? And so when you do that, you now can see that, okay, well, we do have a valid retracement. So after that, what you can do, just like you would do using the retracement tool, is hop in for a sell. Now, once you hop in for a sell, that's fine, okay? We have an A-B pattern, or A point and a B point. So here's your A point and your B point. Now, let's say you can't see the rest of this. Let's say price is actually right here. If price were to stop around here and reverse, well, now we have a Gartley pattern, because that will violate the rule of an ABCD pattern, which is price usually passes up the B point, and that should confirm that you have an ABCD pattern, right? So up until now, we had this low swing low, then a retracement, right? And so we don't know if this is an ABCD pattern or a Gartley pattern. All the way up until price passes this B point, we then know that we have a ABCD pattern, right? Now, if price stops short, we will have a Gartley pattern, and now this will not be an ABC. This will be an X. This will be an A, and then now this will be a C, and this reversal point will be your D point. Okay, so just keep that in mind. I'll talk about that later on as well. Now, we can then go in for a buy opportunity, so then, hold on, let me see. I think we got a little error. But yeah, so going back to this image here, you have 2 points of entries, or 2 ways you can make money off of this ABCD pattern, right? So you have the aggressive C sell, where you can just make a sell here and then have your take profit around here. And then you also have your D buy, your buy off the D point, because the completion of the ABCD pattern usually, especially if it's if you starting off with a swing low, gives you a bullish run. So here's our swing low right here, and so you know that the completion of this ABCD pattern is going to give you a bullish run, right? Because after the completion of this, price is going to start to come up. All right, so we'll then go for a buy, and we can also get the field retracement tool to see where we should be taking profit. And as I mentioned before, I showed you guys how to use the field retracement tool, but on this pattern it'll be a little bit different. Pretty much what you would do is, just drag the field retracement tool from the A point all the way to the D point, and then from there you'll be able to judge your take profit, right? Your break-even trade means, what break-even means is like, it means pretty much where you put your take profit to entry, like pretty much putting your take profit to where you enter your trade. That way, once price reverses, out of your favor, you close out the trade and you lose no money. You're breaking even. Now, that will be at the 0.382 level, and your take profit should be at the 0.618 level, right? After that trade complete, you can now look to get into a sell opportunity, which is really what patterns are meant for. They're meant for the pattern to finish, and then you get into a trade. But doesn't mean that you can't get into a trade early, as I mentioned in the earlier slides. The length of AB should equal CD, but this sometimes isn't the case, being that sometimes price can close prematurely. So yeah, that's true. You want to have a zone where you want to estimate your D point. You know what I'm saying? So you usually can bring out your fib extension tool and kind of figure out where price is looking to retrace. All right, so what I'm going to do is I'm going to bring out a chart and, kind of break everything down for you guys. Does anybody have any questions so far? Okay, awesome, awesome. All right, so let's talk about all this stuff here. Okay, cool. So let's talk about the ABCD pattern, right? So how the ABCD pattern works, right? You find your swing high, swing low, and you verify it based on the retracement tool, right? So look, here we have our swing high, and we have a retracement, but we don't know if this retracement is going to hit a proper level to validate our swing high or low. So what you do, you bring out your field retracement tool, right? Bring it out, bam. Oh wait, it did retrace to the 0.618 level. So this is a valid, this is looking good so far, right? And then price goes upwards. It goes upwards. And you know, it's going upwards, but up until this point, we don't know whether or not we have a, you know, ABCD pattern or a Gartley pattern. So we have this A right here. Then we have a B point. Oh. Oh wait, guys. And now you have your C point. And now your D point is really going to determine if this is a true ABCD pattern, right? So if price passes up your B point, we now have a true ABCD pattern. It's official. We have a true ABCD pattern, and you can hop in for a sell because we have a swing. We start off with a swing high, and usually with swing high, your ABCD pattern completion is going to give you a sell opportunity, right? Okay, so let's say that our D point actually falls short of the B point. Let's say price doesn't pass it up. It stops short of the B point, right? And it starts to retrace the other way before we can get to the B point. Well, now we're looking at a Gartley pattern, okay? And so Gartley pattern always starts with the X. So now you have a X where your A is at, and now you have a A where your B is at. Oops. You'll have a C where your you have a B, I'm sorry, where your C is at. Oh. 1 second, guys. Wonder. Stuff is getting a little tricky. Okay. So yeah, now you have a B where your C was at, and you will now have a